Good morning. Can everyone hear me? Okay, so we'll go ahead and get started. Good morning, everyone. Thank you for joining. I am Zoe Vang, an Accounting Administrative 1 Specialist in Financial Services at CDFA. I am responsible for collecting all the annual financial statements data from all the counties, reviewing them, and calculating the unclaimed gas tax distribution. Today with me is Tina Griffin. We just wanted to get everyone together and have a Q&A session to make sure there's an opportunity to ask questions. You should have received an email from me on August 9th with the annual financial statements and all applicable documents attached. The annual financial statements are due back to me by October 31st. It's important for every county to submit timely because I need all the data from every county for me to make the UGT distribution calculation. The required documents are the annual financial statements Form A, the reportable expenditures and receipts report Form B, and also any explanations of variances from the prior year that are greater than 30%. Two separate training videos related to the annual financial statements and unclaimed gas tax links were emailed to the counties on September 24th. We know that there are new staff on the counties, and we hope you found them useful. Did you guys watch the videos? Were they helpful? And is there any feedback that you guys wanted to provide?
Good morning, Zoa. This is Donna Bagsick from San Diego.
Hi, good morning.
It's good to see you. I just want to express my appreciation for the videos, the YouTube videos. Very informative, very enlightening, and extremely helpful for new staff who are stepping into this new role and taking on this new task. So I really appreciate the effort and the clarity that you provided, and it was very straightforward and highly informative. Pardon my voice, I have allergies. Um, and helpful for me, even who has been in the position and overseeing the preparation of AFS for 2 years now. So I appreciate it. So I just want to express my appreciation and thank you. It was extremely helpful. I am keeping it and I will share it and as you know, with the high turnover we have in the finance world, it will come in handy for us now and in the next coming years. Thank you.
Yeah, this is Garrett with County of San Diego as well. Just want to echo what my colleague Donna said as well. I watched it, even though I'm not doing as much as the work as Donna is, but I also found it very helpful, and I think it'll be a great training tool for us to use moving forward. So no real feedback other than it was great, and appreciate you guys putting it together.
Thank you. Is there any other questions that anyone has?
Hi, taking questions. This is Heather Kelly with Modoc County.
Hi, Heather.
I had a couple questions about the video. Saw that there was the slide that you can calculate your gas tax distribution.
Yes.
So on bullet number 1, it says calculate 224G amount to be distributed to counties by subtracting the CASA agreement plan and commissioner's salary from FAC 224G appropriated amount. And so in the example, it shows the dollar amount, which I was able to track back. But I don't know where the agreement plan number comes from or the commissioner's salary. Is that commissioner's salary specific to the county, or is that something that helps from somewhere else?
So the commissioner's salary, we subtracted, but later on we added back into the distribution calculation amount. It's the 6,600.
Oh, so it's all the commissioners then?
Yeah, yep,
Okay, okay, it's not specific. Okay.
yes.
Yeah, I was trying to run through this to estimate for our county. So I wasn't sure where all the numbers were coming. Okay, that's the 6th.
Hi, this is Kelly Schroeder. Can you hear me from Tuolumne?
Yes.
Can you pull up the form that Heather was just talking about so we can see what her question was? Because we don't remember that. Please.
Can you guys see my screen?
Yep, you're good.
We can see it.
Okay.
Yeah.
Yeah. It was the slide that Heather was asking about. That's the first bullet point that she was asking about. Is there any other questions?
Yeah, I had a question. This is Anthony from Santa Barbara. I was looking at the FAC 224, the what's typed up on the website. I believe it mentioned like the reimbursements are based on our expenditures and the total expenditures of all the counties.
Yes.
So yeah, so I was wondering if it's is that the exact formula or
Yes. Yep. It's this exact formula that we use.
okay.
Where
Zoa, we have a couple of questions in the chat, so I'll just go ahead and read them here.
Okay.
Tanya says, hello, I have a question. There was a slide that says, what about compensatory time off CTO hours being applied at time and a half to a specific program? The answer is include the hours at the time and a half rate as direct hours to the program. Do you mean CTO time worked and overtime that recorded at the time and a half rate?
So any type of absence is treated as it was time worked. So you would record the time in the same programs you would normally would if the employee was working at time and a half.
So does that answer the question? Do we have any follow-up questions on that? She said, could you please repeat that?
You would record the time in the same programs you normally would if the employee was working at time and a half.
And she says, in this case, it says CTO time off, so it confused me. Time off means they were off, right?
Um,
I suppose this is a confusing concept. I don't know, like I can only relate it to filling out my own timesheet, and HR has you put, if you work 10 hours instead of 8 hours, they'll have you, they automatically build in that extra 2 hours is time and a half. So I think when you're filling out the AFS worksheets to try to back into this number, and you're recording by hours, say I worked an extra 1 hour, I'd put in an extra 1.5 hours, so it would make sure that your hourly rate is based, you're already building in that time and a half in there. I hope that's making some kind of sense. Okay, so I'm gonna hop on top of the chat so I don't lose my place. Okay, so the slide deck, that was what Zoa had used in the YouTube videos, and then I see Garrett hooked me up and put in the links to the YouTube videos. Thank you for doing that. Here. 10 steps ahead of me. Okay, and then yeah, okay, you all are looking for the slide presentation. We will PDF that and send that out after this meeting. We'll send it to everybody on here. It's the same as it was on the YouTube videos, but we'll just PDF it so you have that as a resource as well. We'll make sure everybody here gets it. Now we're all caught up. Did anybody have any additional questions?
Hi, I have a question, Catherine from Butte County, and it's a specific question that the counties may also want to chime in on. It's on the 7A marketing, and that is for grower marketing orders for specialized quality/maturity maturity testing beyond the state standardization program requirements. I don't know what people are reporting that, or I don't know which programs or time people are adding to that activity. If I could just hear some examples, that'd be fantastic.
Tina, do you want me to address that? This is Hiram.
Thank you. That would be great.
Okay. Yeah, that's a good question, Catherine. This really isn't something that we see too much anymore. Previously, if you go back in time, and I'm not sure how many years, but at least the 7 years that predate me as the liaison, there used to be certain organizations that would contract directly with commissioners to do certain inspections that go beyond just the standardization program as we see it. And so they would actually pay the commissioner's office extra funds to do things that go above what would be the normal programmatic work. And so when that happened, that line 7A was created as a way to capture that. So my guess is there's probably very few, if any, counties at all that do any type of work like that. So any of the work that you normally would do in the standardization program would just get included, wouldn't really be included in that specific line, but just under the general category, if that makes sense.
Yeah, thank you.
Thank you, Hiram.
And Zoe and Tina, my bill will be in the mail for answering that question.
I think we get that question every year, so I appreciate you eloquently putting it.
This is Jessica from San Bernardino County. I have a question. Where are counties putting their like certified farmers market inspections then?
Do any other counties want to chime in on this in your experience?
Yeah, hi, this is Matt with Santa Barbara. That time goes in fruits and vegetables on the AFS.
Yeah, this is Garrett with San Diego. That's my understanding as well, is direct marketing goes under fruits and vegetables, line 7.
Right, yeah, Garrett, all direct marketing, organic, all goes in fruits and vegetables.
Okay, thank you.
Yeah, I think that's outlined in the annual financial statement procedures manual, which is linked off of the county relations website. If you don't know how to get that, we can point you in that direction. But I think when you look under line 7 for program activities, it includes, I think, that in there, I believe.
Yeah, and I believe Zoa sent that out in her August 9th email as well. That should have been attached to the manual. Okay, so I'll go back to the chat. Jody Hoffman says, how are hours or monies calculated if the employee received payout time? Are those hours included into the AFS hours? How would that be calculated to meet the budget expenses? That is a good question. Zoa, do you know that off the top of your head?
I'm not sure.
So as far as Jody, as far as that, like what category would you put it in, or how are the hours added in? Well, we'll just say like for how would you put the time, like say what category would that fall in? It's the same methodology. It can be the same methodology as the CTO question earlier. You know, if that employee generally works in one program, you would, you know, put the hours, the dollars in that program. But say if you want to spread that in an indirect way across all programs, you could do that as indirect labor costs as well. And then as far as employee payout time, hours or monies, if you're able to tie it to hours and you can come up with an hourly rate for that employee, then you can just put the hours like you would any other employee's hours actually worked. Thank you. All right. Brittany asks, how would you recommend accounting for devices with specific service charges when used for more than one but not all programs? Example, iPads primary for pesticides inspections, but some dual use with Caltrap seasonally. I'd be inclined to say it's kind of up to the discretion of the counties. There is a way with the worksheet that you can indirectly charge services and supplies. And it will use, you know, calculations to spread across all programs. But if you say only want to charge to 2 programs instead of charging across all, I think there's a way you can kind of enter that into the worksheet. You would just call it, like if you have a total dollar amount and you want to split it 50-50 between pest detection, pest eradication, you could just like hard key that, you know, yourself as you're filling out your worksheet. But you could just kind of come up with that methodology on your own and, you know, do your own addition to, rather than having the spreadsheet automate it for you. Hopefully that makes sense. Jose, go ahead.
Thank you. I was wondering, how are other counties accounting or distributing indirect revenue? When you get revenue that is not directly tied to your operations, I think a couple of years ago, many counties receive allocations from the COVID revenue, for example, to offset generic costs. And occasionally we get different types of revenue that is neither weights and measures ag. It's not programmatic, but it still shows on your ledger as revenue. How is that to be accounted, and how are other counties accounting for that?
I can give a recommendation if other counties don't want to chime in, because I too am an accountant. I would again just say this is up to the discretion of the county. Something you can do when you finish your labor cost worksheet is you can check out the percent that it gave you for indirect expenditures. Like it's going to give you a percent for each program, and you can just do some fancy work to apply that percent to your revenue too, and just again just kind of like hard key it. Like if you do your own calculation, we had X amount of what we call indirect revenue. We'll kind of split it the same way we split the indirect expenditures, and you can just add that into your revenues that way. I'm not sure how other counties are doing it, but we're me, that's probably the way I do it.
I think
It's the
that's
same
generally
approach that we
okay.
have in San Diego.
Yeah, the way that she just explained it is how we do it with San Diego. Is essentially we calculate that indirect revenue, and then based upon percentages of, you know, expenditures to, you know, the pertinent programs, right? We apply that indirect revenue based upon those percentages.
Thank you.
Go ahead, Jose.
Sorry, one more question. I know we always put our regular programs in the annual financial, but occasionally counties are required to oversee programs that have absolutely nothing to do with the agricultural commissioner, air control pollution, some other, other non-related, very non-related activities. Are those still being included as the below the line expenses, although it's a different budget unit that the commissioner is managing? Or do we keep those outside of the annual financial?
I mean, Hiram, jump in here if I don't have this right, but I'd be inclined to say that those just go below the line as other. I'm not entirely sure. I'm sure you all know far better than me how that works in real life. If that is included as part of the budget here on the annual financial statements, or if you keep that separate.
Yeah, I think you're correct, Tina. When you look at the procedures manual under other programs, which are below the line, those are programs that are not performed under the authority of the Food and Ag Code. And so obviously weights and measures go there because that's under the Business and Professions Code. But when you look at some of the examples in the procedures manual, it does list things like animal control, air pollution control, planning, where you have land planning things, cannabis, etc. And so really, since those go below the line, all the revenue and expenditures just kind of get separated out anyway from the above the line programs, which is really the focus of the UGT distribution calculation. So I would expect you could put all of that below the line, Jose.
Thank you, Hiram.
Hi, this is Louis with Butte County. Back to that Jose's question. So those below the line, if those fluctuate over 30%, do you want justification for those too?
Yeah, thank you for asking that. Yeah, no, we're not worried about that. Just everything above the line, we're looking for variances, but below you do not need to justify or explain that.
Okay, thank you. I missed that earlier.
Thank you. Okay, we have another question. If we have work comp reimbursement from our own county, which counts towards our overall revenue, can I just record it under other program activities? That's a good question. Well, let me read it again for my own understanding. If we have work comp reimbursement from our own county, which counts towards our overall revenue, can I just record it under other program activities? I don't know if other counties have experienced this. I wish is it below the line revenue? Sometimes in situations like this, we will just say, find a lane and stick to it. So you could call that indirect revenue. You can split it across programs. If it's tied to a certain employee that, works in a specific program, you can call it revenue for that program. So it offsets the expenditures. I feel like, there's some gray area here. So if you find a way that works best for your county, then just always report that type of revenue and that reimbursement in that same way. Does anyone have any thoughts on that? No objections, nothing? So regarding this meeting being recorded, we're doing that now. We'll have our staff clip it down, and then we'll work with Hiram and we'll get that put on YouTube, likely in the same place where the training videos were. So we will be in touch on that in, I assume, the next week or so. but I'll make sure we get the PDFs that we discussed earlier. I'll make sure those get out after this meeting to all the invitees here. Oh, I'm glad to hear that you all appreciate this. We tried something different this year to do the YouTube trainings. I'm glad to hear that was effective, something you can access, because we all only do this once a year, and I'm sure we all forget, access it year after year. And, Zoa put it together so that in real time you can follow along and, send to your staff or whatnot. So we're harnessing the power of remote work. So I really hope that that was a change for the better this year. So we're happy to stay as long as you all need. If you have any questions of each other or of us here in financial services or of Hiram, you can put it in the chat and just speak up. Another question from Jody: how are other counties processing payments and revenues that come in after the fiscal year end? But just, for our own personal financial statements, for CDFA, it's the financial statements on an accrual basis. So if you don't have the cash in hand related to the June and earlier accounting period, but you estimate that you'll receive it, or you know for sure that you're going to receive it, if it's not too late, you would accrue that revenue. So you'd call it revenue in the financial statements that you're about to submit. And then you wouldn't include it in the following year because it was related to the year that you're reporting.
In Solano County, we track what's owed to us that we haven't received, and we do accrue it, and we report it in our statement as money that we anticipate that we're going to receive as received. So yeah, so we include it in our annual financial statement, even though we haven't received it yet, but we anticipate we will receive it later. Yeah.
Ooh, thank you. That was the right answer.
I'm pretty sure, Donna, correct me if I'm wrong, I'm pretty sure that's how the County of San Diego handles it as well.
Yes, the County of San Diego also follows accrual basis for accounting, and we do accrue all the revenues before fiscal year and those that are attributable to the fiscal year, and the receipt of payment are reported separately. But yes, for financial reporting purposes and general ledger reporting, they are accrued for the year that they are invoiced.
Thank you. Lots of time here. Any questions on the forms? Any questions on the calculations? Any questions on the timeline from here on out?
I do have one question, and I think it's more for Hiram. I think you answered this for me last year, and I want to confirm and make sure. So I know that there are apiary activities that we do for the state, and then there, we also have a beekeeping ordinance. I think those activities that are within the beekeeping ordinance do fall within that category. So those are still eligible to pull down, correct?
Yeah, my initial thought would be yes. Usually what I do when I question it, I'll go back to the procedures manual and look under activities because there are certain things that the county will do that fall under the food and ag code that are part of what we would deem that program, even though you might have a contract or might not be, reimbursed or overseen by, the state through a contract, if that makes sense.
Got it. Thank you.
I think Heather, I don't know if she had her hand up to comment on this specific question or she had a different one, but just thought I would recognize Heather if you had something related to this or you're moving on.
We can barely hear you. It's cutting in and out. So feel free to type it in the chat if you prefer.
Had a question about the non-regulatory pest control, the 12 and programs. What kind of do you follow that?
I think, thank you, Heather. I think she said we missed just the very end of it, but what falls under the other programs. So everything for the most part, we just pull from the procedures manual. So there's a whole host of things in the procedures manual. It's in the file, page 22, but it's just an all-inclusive list of anything that could be reported there. So
into the chat.
You want me to put that in the chat, you said?
I just typed in the chat there.
Okay.
The question.
So non-regulatory pest control, it doesn't really break it down any further than that, but there's a number of things under other program below the line, which I assume that's where that would be reported.
So what kind of programs are non-regulatory pest control? Do you have any examples?
Does anybody have any experience with that, what they're reporting as non-regulatory pest control?
I can speak to what the county of San Diego puts under that. There's work that we do for invasive weeds, which would be above the line, right? Because those are considered regulatory, because they're rated pests, right? But there's a lot of vegetation management that our integrated pest control team does. That's not regulatory. It's just like roadside weed management. We also do some pest management at like county facilities. So those are all non-regulatory things that go below the line. So if you have a team that's out kind of doing veg management for the county, but it's not on like a rated weed or anything like that, that would be below the line.
Exactly. That's what the answer. Thanks, Garrett.
Heather, in Orange, I was going to share in Orange County, under Health and Safety Code, the code authorizes the board to assign the commissioner to do the weed abatement for fire hazard reduction. That's another program that we put under the other programs. It has revenue through tax assessments, special tax assessments, and expenditures. But it's one of the ones that goes in other programs here in Orange County.
So they.
keep losing you, Heather, but yeah, feel free to type in the chat if you need to. I'm going to keep going. Diane asks, so if your budget status reports for the prior fiscal year does not match your revenue totals on your AFS when you add anticipated revenue not received yet, how do you justify that? Should you be audited? So if your budget status reports for the prior fiscal year does not match your revenue totals on your AFS, so tell me if I have this wrong. So you're doing your AFS, you're putting your accrued anticipated revenue on your AFS, and then in the next year, she said, meaning what I print out of our financial system, and then say in the next year it doesn't materialize what you anticipated. I assume you would just call that, like, say, a prior year adjustment in the subsequent year. So if I was like, I'm gonna accrue $50,000 in revenue related to this year, I don't have it yet, but I assume I'll get it. And then, you know, you reopen your new year and you only received 20,000. Since, you know, your anticipated revenue was just recorded as an accrual, took it back out the next year, you would have a prior year adjustment, the difference between what you anticipated and what you ended up receiving actually. I don't know, auditors will ask us, like, it varied in a material way, why? And then you can just justify why you assumed you anticipated you'd receive this much revenue and then why you didn't. That seems like normal business practice. I hope I answered that question. Let me know if not. Okay, so I could manually write on the bottom of my reports or add the anticipated revenue to match AFS. That would work. Maybe I'm not understanding. If I manually write on the bottom of the reports, are we talking about across 2 different fiscal years? Because I think generally, like, the revenue you're reporting this year is like this year's revenue plus a true up of last year's revenue, what you ended up receiving. That's all included in the total. Yeah, feel free to unmute. So I'm gonna pick an adjacent question here. Okay, I know someone mentioned recording accrued revenue not received during the year, so we would record based on billing and not the actual revenue received, right? Because the two could end up being different when the actual check comes in. Yeah, so that's piggybacking off of what I just said. Like, yeah, you're just sometimes just estimating your revenue. When it's time to do the reports, you don't quite know what you're going to continue to receive. So you might have actual billed items, you might have estimated items, you know, one being cash basis, what you actually receive, and one being the accrual, what you anticipate. But yes, that could end up being different, and at least in our accounting practice, that ends up getting worked out in the subsequent year on the next year's statements, the difference between what you anticipated and what you received.
I could be wrong, but I think maybe Diane could clarify what she means. But I think she's asking that if they didn't accrue in their budget, should they put it on the AFS? I think that might be what she's talking about.
Okay, thank you. So like if you're reporting cash basis, you didn't accrue any revenue, maybe? She added more. So we print out the revenue reports from the county financial system. The totals for revenue will not match the AFS if I add anticipated revenue that's not captured by the auditor on our reports. I'm not really sure we can advise on that. We just, in my mind, one is cash basis, one is accrual basis. So if you're reporting on your AFS, we ask that you report an accrual basis of accounting. And if separately for your auditor, you don't have anticipated revenue in there, I don't think we on our end would need to know that. If the two different bases of accounting, that's what it seems like to me. So that would be the difference between one and the other is you're anticipated, you're including on your AFS, whereas it sounds like otherwise it's not there. But I think for the most part, yeah, everyone is reporting accrual basis, I assume. Yeah, we can, Diane, we can schedule a separate meeting if you need that. Yeah, we can, I'll reach out to you. I'll reach out to you after this. I'll put my email address in the chat, and if you want to email me something, and I'll put Zoa's too. Is there anything else? I have 3 more weeks before AFSs are due. I'll read Diane's message. I guess they don't accept outstanding revenue after the accrual cutoff time, so the auditor just assumes it's the next year's figures. It's not noted anywhere on available reports I can print. Yeah, we'll chat. We can chat a separate time. I feel like accounting at year end is just a point in time kind of thing anyway. Like you only get a small amount of time to accrue, and obviously, activity continues beyond when you have to stop accruing. So you never are 100% correct. You don't know until you know. So did you want to talk about the timeline from here, kind of like what our office does the next few months?
Yep, I can do that. So, from October to November, I'll audit the AFS for accuracy and completeness, and the counties will be contacted as necessary, and I'll calculate the MOE and email it to the counties. And then in December, the distribution calculation is completed, and I'll email the counties a letter stating the MOE eligibility with the distribution amounts. And then in January, so in December, I'll email the counties, whoever didn't meet their MOE. And then in January, the justification letters are due to CDFA for the counties that did not meet their MOE. And then in February to March, CACASA meets to accept or deny the justification letters. And then I'll email the counties the status if the justification letters were accepted or denied. And in April is when we send out the payments to the state controller's office. You had a question, Jose? Go ahead.
This is a basic one. I apologize. So you mentioned you calculate the distribution amounts for the unrefunded gas tax to each county. Basic question. Is the distribution amount based on the percentage of general fund spent by the county, NCC spent by the county and above the line? Or is it based on the total expenses above the line, not considering the reimbursement side?
I use the amount from the AFS. It's the subtotal CDFA agricultural code programs on the AFS. It's above the line.
I'm looking for it. Do you know which one?
Subtotal CDFA agricultural code programs.
Subtotal. Okay, that would be I-39? No, I-44?
Let me open it.
So what do you want me to share my screen?
Oh, I got it. So it's this amount here, the subtotal CDFA agricultural code programs. Do you see my screen?
Yeah.
Yes.
Yes. So we use the subtotal of the expenditures and the revenue reimbursement to calculate the distribution.
So the distribution is based on your net county cost after you remove the revenue, or your total expenses before you remove the revenue, just to confirm.
It's
after you remove the revenue.
Yeah,
Okay.
and for the calculation itself, we actually take out the UGT payment too.
Yep.
So it doesn't matter what you got paid, that doesn't go into the calculation. It does go into your MOE calculation, but it doesn't go into the calculation of how much the county's going to get paid this year.
Nice, thank you.
Jose, is your hand still up or you have another question?
I apologize. No more questions from me, I promise.
You don't even need to raise your hand, just speak up.
I'll say, is that just for this call or forever in all circumstances and situations?
To be determined.
Okay, dang it.
I don't.
Tina, and so I was just thinking, just in case we get one last question here at the end, I think it would be good if you weren't going to state this, and I apologize if I'm jumping again, on your list of things to talk about today, but I thought this format worked really well, but it might be good for all of those on the call, whether you submit feedback directly to Zoe or Tina or funnel that through your commissioner that will eventually come to me. Why don't you share sort of this process we went through with next year? We can always remind people and new staff that we have training videos posted so that they can review those, and then possibly think about doing the same thing where we schedule another Q&A session around the same time of the month next year. And so keeping that in mind as the process, you think about that and then provide feedback to us so that we can kind of decide the best way to go about this. And I also wanted to echo what some of the comments were earlier. I viewed the training videos, not in their entirety, but most of them, and I thought they were really well done. And I want to commend both of you for your work on that.
Thank you.
So this is Amanda Stoner from Mendocino County Department of Ag. I have a question because I feel like the whole conversation that we just had a few minutes ago about accrual and everything like that, it kind of confused me. So just so I'm clarifying we're on the right page, in our department, we normally report everything we received in that fiscal year. Even if we received a payment from the previous fiscal year, we don't count it for that fiscal year. We count it for the fiscal year it was received. So that is how you guys want us to pretty much do this, correct?
Yeah, I feel like it's a little bit subjective based on how your county does things. I mean, I believe generally it would be the accrual basis. So if you receive something this year or last year, you didn't recognize it last year, it'll be your revenue this year. So I feel like it's
okay, great.
I'll just stop talking then.
Yeah, maybe I'll jump into Tina. There's two ways to go about this that we've heard on the call today. The important thing is either one works mathematically and from an accounting standpoint. The important thing is whatever method you choose, you need to be consistent and do that year after year. That's the important thing. Once you decide which way you're going to do this, always do that. Otherwise, you will run into problems.
Okay, thank you for the clarification.
And Scott just put a pro tip in the chat. May want to check with your county and see if they are a GAP county, generally accepted accounting principles county, in which case you'd likely be using accruals. We can start to wrap up here. Zoa, did you want to close us out? You have anything else?
Nope, I don't have anything else. If you guys have any questions, you can always call me or email me.
All right, last call, everybody. Did we miss anything? And like Zoa said, we're available. Reach out to Zoa. Yeah, again, we'll send out the slide deck, with Zoa's contact information, and we're here for you guys the next few weeks. So just let us know. And thank you all for attending. Spread the word, spread those YouTube videos. Let us know any and all feedback. Thanks, everybody.
Thank you. You guys have a good rest of the week.
Thank you, and thank you for putting this together.
Thank you.